Today's extended trading idea focuses on a metal increasingly at the center of several major global themes: copper. Now, copper sits at the intersection of artificial intelligence, electrification, data center expansion, grid investment, supply chain security. So the question is not whether copper matters. The question today is, can a period of seasonal weakness create a better opportunity within a longer term structural story of demand? Because sometimes the best opportunities don't emerge during strong rallies, but during periods of temporary weakness. So if we look at the chart here, we can see this chart shows copper's seasonality over the last 15 years. And if you look at the first quarter, copper does tend to perform relatively well during earlier parts of the year. You can see from January the 1st through to early March, there's an average positive return of 3.35% and 60% winning trade percentage. But as we move into the summer, the pattern becomes more challenging. You can see here during these sort of spring months, copper has a flat return, but by the time we get into the summer, you can see that that has changed even more. And from June the 1st through to the 30th of September, there's now a negative return of 2.93%. And there's only a 33% winning trade percentage. So we see weaker momentum, softer price action, and there's just a tendency in this summer period for copper towards seasonal pressure. Now, importantly, it doesn't necessarily imply a major bearish move. If we look at some of the maximum drops, they can still be quite substantial. It's quite a volatile market. You can see falls of 17%, 16%, 25% in 2022, 13% in 2021. Now, what we want to focus on is that weaker seasonal period does tend to change as we head into the end of the year. So from a seasonal perspective again, as we go through to the 1st of October through to the 31st of December, look, we now have a positive return of 4.79%. So you can see a positive winning trade percentage of 66.67% and an annualized return of 20.60%. And you can see the cumulative profit curve is steadily tracking higher. So the trade idea is relatively straightforward. Rather than chasing copper during periods of strength, investors should consider whether this period of summer weakness can create an opportunity for positioning into historically stronger periods later in the year. You can see later in the year, particularly you look at the last few weeks of the year, 80% winning trade percentage and 3% average returns. So what we're trying to identify with this idea is a period of seasonal softness, and then we're going to look to combine it with technical confirmation and assess whether price begins stabilizing during this weaker period to give us an opportunity for the stronger time at the end of the year. So in other words, the weakness becomes an area of interest itself. Now, from a fundamental perspective, the longer term story for copper remains tied to several structural themes. Copper demand's increasingly linked to AI infrastructure, there's data center expansion, all of it needs copper, renewable energy, electric vehicles, power grid investments, and there is a difficulty in creating new copper mines. Their lead time can be around 10 years. So with all the expected demand through those different elements which will use copper, we can't quickly provide the copper to supply all those demands. So there's likely to be greater demand for copper than can actually be met in the medium to near term. So many financial outlets have repeatedly highlighted copper's importance in electrification and AI infrastructure build out. But remember, those long-term demand stories don't always move in straight lines. Like markets frequently, pause, consolidate, retrace before trends continue. You can see in the very last, few couple of years, we see the steady move higher in copper prices. Now, technically, this is where technical analysis becomes important, because technicals can help identify whether buyers and where buyers can potentially step back in. Now, this is how I like using the seasonal data, particularly during these weak periods. What I like to do is I like to look at what the maximum falls are. So from the 1st June, 30th September, you can see that on a number of occasions, we've had maximum drops of greater than 15%. 1, 2, 3, 4, 5. So 5 out of the last 15 years, we've had a fall of greater than 15%. If you look at the last 1, 2, 3, 4, 5 years, we can see we've had a fall of greater than 12%, 1, 2, 3 times. So straight away that tells me that any potential retracement could be very interesting if it goes beyond 10%. That could create a really good dip buying opportunity. So now when I look at the chart, what I'm looking for is any potential area where buyers may come in of support. And there's two areas that jump out to me. This is a weekly chart, and I'm just using very simple horizontal support and resistance levels. You can see here that this is resistance, 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 old resistance becomes new support. So there's a great interest here. You can see resistance, resistance, this big band of resistance, and again, resistance, support. So the two support areas I'm looking at for potential buying is here, 7.97%. So if we get a fall of 7.97%, that will be suitable for buying. And if I get a fall of around 15%, that will be an ideal area to buy. So anything in between the 5.83 and the 5.45 is a really interesting area for potential buying. So for there, I can see if I get down into this region, that would be a great opportunity for potential buyers looking to benefit from that strength that we often see at the end of the year. So when we combine the structural demand story, the weaker summer seasonality, the stronger year-end tendencies, and technical confirmation, we're left with an interesting question. And that is seasonal weakness in copper simply a temporary dip? And could it become an opportunity within a larger long-term trend? Now, while nobody can predict the future, using an extensive database can help investors understand when markets historically become stronger and when opportunities may begin to emerge. Remember, don't just trade it, Seasonax it.